The Nasdaq, one of the largest and most well-known stock exchanges worldwide that helped change the stock market to the digital platform everyone uses now, where you can find all the biggest companies listed, such as Apple, Alphabet, Amazon, and Tesla. This video will take a deeper dive into its history and how it works in hopes to spread knowledge on the topic and provide value to the viewer. Leave a like if you enjoyed the video and subscribe to Business Ventures. The Nasdaq is the largest and oldest electronic stock market in the world, meaning all of its buying and selling happens electronically rather than on a physical trading floor. Short for the National Association of Security Dealers Automated Quotations, the Nasdaq is the second largest stock exchange globally. Based on market capitalization of its listed companies, it is exceeded by only the New York Stock Exchange. The Nasdaq is the world's largest electronic stock exchange, with two closely watched indexes, the Nasdaq Composite and the Nasdaq 100. Technology, consumer services, and other growth stocks dominate Nasdaq and have caused it to outperform other stock markets in recent years. The easiest way for individual investors to participate in the Nasdaq's volatile but high-performing stocks is via index funds. The Nasdaq, which lists over 3,889 companies and trades about 4.5 billion shares a day, is a unique electronic exchange and the fastest growing stock market today. The market was formed after an SEC study in the early 1960s concluded that the sale of over-the-counter securities, those that aren't traded on the existing stock exchanges, was fragmented and obscure. The report called for an automation of the OTC market and gave the responsibility for implementing that system to the National Association of Security Dealers, the NASD. NASD began construction of the Nasdaq system in 1968, and its first trades were made in the beginning of February 8, 1971, when Nasdaq became the world's first electronic stock market. Unlike the specialist structure of the New York Stock Exchange, in which one specialist represents a particular stock, Nasdaq market makers compete with each other to buy and sell the stock they choose to represent. More than 500 member firms act as market makers for the Nasdaq. Each uses its own capital, research, and system resources to represent a stock and compete with the other market makers. Market makers compete for customers' orders by displaying buy and sell quotations on an electronic exchange for a guaranteed number of shares at a specific price. After market makers receive orders, they immediately purchase or sell stock from their own inventories or seek out the other side of the trades so they can be executed, usually in a matter of seconds. The four types of market makers are retail market makers. They serve institutional and individual investors through brokerage networks that provide a continuous flow of orders and sales opportunities. Wholesale market makers. They serve primarily institutional clients and other brokers or dealers who aren't registered market makers in a particular company stock but need to execute orders for their customers. Institutional market makers. They execute large block orders for institutional investors such as pension funds, mutual funds, insurance companies, asset management companies. And finally, regional market makers. They serve companies and individuals of a particular region by focusing regionally. These are market makers that offer their customers more extensive coverage of the stocks and investors in a particular area of the country. Now that the world is finally opening back up, if you're an investor looking for someone to visit or find yourself in the Big Apple, the Nasdaq's current headquarters is located in New York on the famous Wall Street at 4 Times Square, 43rd and Broadway. The Nasdaq might be outperforming the S&P 500 and the market in recent years, but that doesn't always protect it from the inevitable dark days that come with investing. The Nasdaq has seen its ups and downs, living through massive crashes such as the dot-com bubble, 9/11, the financial crisis in 2008, and the recent pandemic. On August the 22nd, 2013, Nasdaq shut down all trading from 12:14 p.m. Eastern Daylight Time to 3:25 p.m. Eastern Daylight Time. The flash crash was caused when one of the New York Stock Exchange servers had trouble communicating with a server of the Nasdaq. The server provided data about stock prices. Despite several attempts, the problems couldn't be resolved, and the stressed server at the Nasdaq went down. Nasdaq also had a problem with the Facebook, now Meta, IPO, the second largest in history. On May the 18th, 2012, trading on Facebook's initial stock offering was delayed for the first 30 minutes. Traders could not place, change, or cancel orders. After the glitch was corrected, a recorded 460 million shares were traded, creating a 50 million in losses for traders. Nasdaq admitted to that technical error that caused the delay. The Nasdaq's impact changed the entire stock market, becoming the largest and oldest electronic stock market in the world. It shaped the path for worldwide investors being able to make investments globally from the comfort of their home. This was a dive into the Nasdaq, its history, how it works, and hopefully giving you a greater general understanding. Last week, we made a video on understanding the New York Stock Exchange. Go check that out in the link in the description. An Understanding the Euro Next video will also be coming out soon, so stay tuned for the Understanding Different Stock Market series. Leave a like and comment your thoughts on the video and the Nasdaq. Subscribe to Business Ventures for more weekly case studies and business news.